Very good morning to one and all. My name is Aditi Bari, a student of Deep Education Society, SAS Institute of Management and Studies. Today I am going to present a PPT on financial modeling. My topic name is cash flow statement. Cash flow statement. Why cash flow statement? Shareholders' value is not widely accepted as an appropriate standard for performance in US business. The stock market sends a clear message that earning per share is not a most important measure. Now is growth for growth's sake. What matters is long-term cash generation. Basic form of cash flow statement. Cash flow from operating activities, direct method or indirect method. Cash flow from investing activity. Cash flow from financing activity. Total cash flow is added to beginning cash balance and should result in ending cash balance. Flow from operating activities includes current assets except marketable securities and as term notes receivable which are investing. Current liabilities except a note payable which are financing. Revenue and expenses. Flow from investing activity includes short-term and long-term investment. Short-term and long-term notes receivable. Property, plant and equipment. Intangible assets. Flow from financing activity includes short-term and long-term loans, capital stocks and paid in capital in excess of par, retained earning, dividends paid. General theory. Take revenue or expenses account includes cash and accrual. Adjust out accrual amounts. Result is net cash in or out. Too expensive to clarify all cash transactions into operating, financing, investing activity. Cheaper to use accrual system and just adjust out accrual information. Operating activity indirect method. Net income plus depreciation expenses plus losses from sales of assets less gain from sales of assets less increase in current assets plus decrease in current asset plus increase in current liability less decrease in current liability is equal to net cash from operating activity. Operating activity direct method plus cash received from customer less cash paid from inventory less cash paid from operating expenses less cash paid from income taxes less cash paid for interest. Add cash received from dividend and interest is equal to net cash from operating activity. Cash received from customer sale less increase in AR received less cash or add decrease in AR less write-offs add increase in unearned revenue or decrease in unearned revenue is equal to cash received from customer. Cash received from customers other variation sales plus beginning net AR less end net AR less bad debts expenses adjust less beginning unearned revenue add end earned revenue is equal to cash from customer sales plus beginning AR less end AR less return offs less beginning unearned revenue plus and unearned revenue is equal to cash from customer. Cash paid for inventory cost plus goods sold plus inventory less beginning inventory is equal to purchase plus beginning AP less end AP is equal to cash paid for inventory. Cash paid for operating expenses. Operating expenses plus beginning prepaid less beginning prepaid add end prepaids add beginning accrued expense less end accrued expense is equal to cash paid from operating expense. Cash paid for income tax. Income tax expenses plus beginning tax payable less end tax payable is equal to cash paid for income tax. Cash paid for interest. Interest expenses add beginning interest payable less end interest payable is equal to cash paid from interest. Cash received from dividends and interest. Dividend and interest income plus beginning interest receivable less end interest receivable is equal to cash received from dividends and interest. Cash flow from investing activity. Cash received sales or paid purchase for long long-term investment, property, plant and equipment. Whole cash amount received or paid. Look at change in investment and fixed asset accounts but may need more specific information. Examples equipment. Balance sheet amount change beginning $3 lakh ending $4 lakh. Can you just say net cash out of equipment was $1 lakh? Example equipment continued. Sold equipment for $65,000 cash that had book value of $40,000. Financing activity. Cash received from sale of stock. Issuance of debt. Cash paid for payment of debt. Payment of dividend. Look at change in stock debt and return earning. Thank you.